Thank you.
Sue, you are going to be our first speaker. We've shared a schedule. We shall be
And we
going
are going to
strictly
start,
as
ma'am.
per
We are
the
going live.
schedule.
Okay.
All right.
Ma'am, we are going live.
Yes, okay. Namaskar and good day to all our distinguished speakers and to all the esteemed attendees from across the globe. I welcome you to this third breakout session, Opportunities in Maritime Financing and Insurance. For the next 90 minutes, I am going to be your host and anchor while setting the context for this session as a convener too. Well, we all know that money makes the world go round. So does shipping. And when we say shipping, it's in context of the entire maritime industry, as half the world would starve and the other half freeze without it. Dear friends, that's what makes this today's session an opportune subject to discuss and deliberate. So let's hear what the Managing Director and the CEO of CRISIL in India has to say about this. The maritime financing and insurance is the core which fuels and powers the growth of the maritime sector and in turn the economic growth. The positive correlation between global trade and the maritime sector is well known to all of us. We see a distinct shift in the global maritime trade from the Pacific to the Indian Ocean region, giving rise to economic influence. In line with Asian economies' strong contribution to global trade and their high integration into global shipping networks, Asia is by far the largest seaborne trading region, with 62% of the goods unloaded and over 40% of all goods loaded in Asian seaports. There cannot be a more opportune time for us to be in the main maritime trade center globally. Let us hear what the top executive from one of the reputed global banks, the cluster CEO of Standard Chartered Bank, has to say in this regard. Zareen has put it across very aptly. With India's double-digit GDP at 11.5%, the Indian economy is poised to outpace the rate of global economic growth of 5.5% in 2021 and shall make it the fastest growing trillion-dollar economy in the world. This opportunity is also reflected in the fact that international project finance, an important source of infrastructure finance, fell globally by 2%, but rose by 17% in Asia. The Indian subcontinent is forecasted to be in focus going forward in the next 5 years. India is anticipated to have greater economic influence across the Asia Pacific region since India is predicted to be one of the largest manufacturing hubs of the world. And this is also our Maritime Vision 2030, which shall give wings to the Honorable Prime Minister's vision of an Atmanirbhar Bharat. Besides strong growth rate, India's influence will also stem from its attractiveness as an investment destination and a jurisdiction where domestic business can grow and expand beyond their borders. The economic potential for India remains strong with the growing population and rapidly expanding middle class. It presents opportunities for business. India is forecast to emerge as the world's largest middle class market, surpassing both China and the US. As India fought the global pandemic, it charted its own unique trajectory, showing remarkable resilience, be it in fighting the virus or ensuring economic recovery. It is noteworthy that defying the global trend of decline of around 42% in FDI inflows, India recorded a positive growth of 13% FDI in 2020. Even in the global financial crisis, India had coped better than the world because of our robust, well capitalized, and well regulated financial sector. Gradual and cautious opening of the capital account and the large stock of foreign reserves also helped. Now, having set the context for the attractiveness of India as an investment destination, let's hear Dr. Ramana, the chairman of New Mangalore Port Trust, who is my co-convener for this session, on the gamut of ongoing and potential maritime projects and immense investment opportunities that are available in the sector. Let's listen to Ashu Suyash, the Managing Director and the Chief Executive Officer of CRISIL, what she has to speak on the investments relating to the port sector. We've heard Ashu earlier. We'll listen to her once more.
Quantum of investment required for investing in one port is as high as $1 billion. This places the spotlight on long-term debt financing at competitive rates, and a vibrant corporate bond market will be very necessary to meet these financing needs.
Talking about maritime projects and investments, let's listen to my co-convener, Sri Dilip Kumar Gupta, the Managing Director of Sagarmala Development Company, the flagship project of Indian maritime sector, on his views on financing of landside infrastructure and floating assets, as also on the role of SDCL in financing the projects related to the maritime sector. Over to you, Mr. Gupta.
Good morning and namaste. I welcome you all to Maritime India Summit 2021. As far as financing of landside infrastructure is concerned, such as port, equipment, modernization, etc., considerable amount of development has taken place due to adequate and established financing system, which is in place to some extent. However, the maritime sector is a capital intensive in nature and requires substantial financial resources for the development of requisite infrastructure. Thus, there is need to provide enhanced liquidity limits for funding of maritime sector. I am looking forward to Mr. Vinod Giri to provide his valuable inputs and enrich us on the topic of financing of port terminals, and port-based industries. As far as floating assets are concerned, the desired level of funding at reasonable cost and for long tenure is not forthcoming from the existing financial system because of inherent risk profile of floating assets. This is one of the major reasons that large size ships are not being ordered in India. In absence of that, Indian companies needs to charter the foreign vessels, which resulted into loss of huge forex worth billions of dollars in form of freight payment. Therefore, there is an urgent need for devising a mechanism by which financing agencies, banks can provide a long-term tenure fund at a reasonable cost for procurement of floating assets. This will not only provide huge impetus to the Atmanirbhar Bharat in shipbuilding, but also provide huge incentive to several attached industries such as steel and other related industries. I am looking forward to Mr. Ashwani Bhatia, MD State Bank of India, who has vast experience in the field of banking and finance, to put some thoughts on the financing of coastal, inland waterways and allied infrastructure. I'm also looking forward to Mr. Sebastian Bram to speak on innovative solutions for funding and developing vessel financing mechanism, which may be helpful in devising solutions for providing long-term debt at reasonable cost for financing floating assets. We would also request to come out with the suggestions, if any, for making changes in the existing legal system so that financial institutions can provide debt at reasonable cost to maritime industry for floating assets. However, the second question that what is the role of SDCL, that is the Sagarmala Development Company Limited. SDCL is mandated to do equity investments in the projects identified under the 4 pillars of Sagarmala program. The investment in the projects are proposed to be done through SPV framework, in which SDCL is allowed to take stake up to 49%. The investment is being done by SDCL after undertaking detailed financial and legal due diligence of the project. I'm looking forward to listen to the great speakers, and I wish a great success to this. Thank you and namaste.
Thank you, Gupta ji. Now that all the conveners have together set the tone and the context for maritime financing and its destination too, I think it's time for us to shift to our eminent speakers to enlighten us with the latest trends and the road ahead for maritime financing in the Indian context. I invite Sue Ann Gann, the partner of Norton Rose Fulbright, to share her views on key trends and developments in maritime banking and financial services in the Indian environment. Over to you, Sue.
Thank you, Madam Joshi. Ladies and gentlemen, good morning, and to some of you, good afternoon. My name is Sue Ann Gan, and I am a shipping partner at Norton Rose Fulbright, based in Singapore, specializing in finance and the restructuring space. This summit is an occasion for leaders from the industry to come together to discuss the latest developments in the maritime industry and to exchange views. I'm very happy to join you today for the breakout session on the topic of opportunities in maritime financing and insurance. This topic is also timely, especially as I understand that India is currently working on Maritime India Vision 2030, which is a 10-year blueprint with the aim of overhauling the Indian maritime sector. I will kickstart today's session by thinking about some of the key trends and developments in maritime banking and how these trends fit into shipping in India. 2020 has been an unprecedented year. The COVID-19 pandemic had a big role to play in the shipping scene in 2020. The effect of lockdown and travel restrictions have also caused some sectors, particularly the offshore and the cruise sectors, some strain. In the maritime banking space, traditional shipping banks have also taken a very cautious and also more demanding approach, resulting in more stringent terms and higher pricing. At the same time, Chinese leasing companies have also faced a slowdown in their ship finance activities, having been impacted by their exposure to aviation and also combined with the high cost of US dollar funding. However, by mid-2020, I was very glad to see that the shipping market saw some good news, with the situation somewhat stabilizing and the focus shifted to global economic recovery. A consistent trend that we have seen in 2020 in the ship finance space is that financing has been available to those who look for it. But where funds are available, these funds come with a huge price tag. A development we have also seen as a result of many traditional banks exiting the market are corporations, like ship owners, looking to alternative financing structures, such as the Chinese and the Japanese leasings, that are popping up to fill the gaps. And this situation is not too different from what happened in 2008 during the GFC. Another trend that we have seen is that shipping banks are becoming very selective in who their customers are, what is their portfolio, what is their appetite for new business, which is sometimes very limited. Banks are generally focusing on their usual customers, and this has made large-scale syndicated financings quite difficult, and is a trend that we see will continue in 2021. And this trend is largely compounded because of the uncertainty surrounding technology and the pace of change in the industry. For example, banks will be looking at issues such as, what is the resale price of secondhand vessels in the future if environmental rules continue to change. Now, I've been speaking now for a few minutes, but it's not all doom and gloom. There is always light at the end of the tunnel. After all, the maritime industry is a very resilient industry, and this industry has gone through good times and the bad. And although the international banking environment remains challenging, with banks focusing on different business models and with an increased regulatory focus, such as Basel, a big trend that we are seeing is a focus on green shipping. Now, what is green shipping? This is quite a wide subject, but in the context of climate change and sustainability, it is in everyone's minds, whether you are a ship owner, whether you are an engineer or a bank. But the challenge is that it's not always easy for someone to find their way through the various positions and regulations for existing finance tools, some of which are under construction. Now, the concept of what is green is also changing, and this leads to a little bit of a complication. For example, for now it means LNG, but in the future it could mean hydrogen fuel cells, etc. Generally, we see that traditional shipping banks are very impatient to see more projects available under the green financing banner. As I explained earlier, shipping has evolved over the last 10 years, and the way ships are financed has also changed in the last 10 years. We expect the market to continue to implement changes throughout 2021 and beyond. And this is not surprising, given that we now have more millennials in the workforce. So today, a key focus and trend in the maritime banking space is the growth of sustainable financing. And what is sustainable financing? And this is what I would call responsible lending. So at a global and regional level, sustainable lending is gaining traction amongst borrowers as well as banks. And these are especially good for borrowers who are keen to demonstrate their commitment to sustainable practices. So the idea is that if the borrower can reach a set of sustainable targets, then they can get some margin reductions, for example, which will play well because this will result in cheaper borrowing cost. Now, in the context of India, where the availability of adequate and competitive domestic finance is scarce, the trend that we see in sustainable financing will have an impact on how Indian ship owners will operate. So as to be able to capitalize on the opportunities in foreign borrowings. As we all know, the maritime industry is capital intensive. It is now important for shipping companies, whether you are small or big, to embrace sustainable practices in order to access foreign finance. Having been in the industry for some time now, I can say that despite the many changes the ship finance industry has undergone, and looking at the Singapore story on how Singapore has built itself as a very successful maritime hub over the many last years, I'm hopeful that with the support to the Indian owners announced in the recent union budget, this will help Indian ship owners in their acquisition of ships to service tenders, for example. And all these schemes and support given to Indian shipping companies will eventually enhance Indian companies' share in global shipping. Thank you.
Thank you, Sue, for your views. I've got a feedback from our YouTube viewers that the video that we played was not audible while they saw the video. So I think we'll go in for a slight disruption, and that is what resilience is all about, how you adjust and accommodate. So we'll once again play the video of Dr. Ramana on the opportunities in the port for the benefit of our larger audience in the YouTube. So we play that once again, and dear viewers, please do give us a feedback whether the audio is now clear or not.
Welcome to Maritime India Summit 2021. India is blessed with a long coastline stretching more than 7,500 kilometers, which is dotted with 12 major ports and more than 200 non-major ports. The country has 111 navigable national waterways with a coverage of more than 20,000 kilometers. Maritime trade for the country is approximately 95% of the total trade by volume and 70% by value. The Ministry of Ports, Shipping and Waterways carried out a detailed exercise to outline its key targets and the initiatives required to achieve those targets. Some of the key initiatives being developing 3 ports to mega status, that is, with more than 300 million metric tons per annum cargo handling capacity, tripling the share of transshipment of Indian containers by the Indian ports, a shift in major ports administration towards landlord model, tripling the number of cruise passengers, increasing share of renewable energy at major ports by 6 times. As the country is progressing towards megaports and transshipment hubs, There are investment opportunities worth more than $21.6 billion. Apart from this, $2.7 to $3.3 billion is required for dredging in container and bulk terminals, and investment of $270 to $330 million are estimated for improving the performance across the ports. Concept of coastal economic zones, coastal units, port industrial and maritime clusters, and smart industrial port cities have been introduced under the umbrella of the port-led industrialization. Investments to the tune of $110 to $130 billion would be required to plug and play infrastructure and value-added services at the major ports. A shot in the arm of coastal shipping would come from the investment ranging from $280 to $310 million for the developing infrastructure, including liquid cargo handling jetties, food grain depots, cement silos, aggregation centers, cement and handling storage infrastructure for coastal coal. Since inland waterways transport is the most economical and least polluting means of transport, the Ministry of Port, Shipping and Waterways is preparing to revolutionize the sector. The investment opportunity for this sector is more than $613 million, apart from which $17 million investment is required for capitalizing additional cargo and ferry potential with neighboring countries, including Bangladesh, Nepal, and Bhutan. Over the last few years, the cruise industry in the country has grown at fast pace. The government plans not only to develop and upgrade domestic and international cruise terminals at 12 ports, but also wants to develop 4 theme-based coastal destination circuits to activate the cruise demand. The investment required for these projects range from $285 to $340 million. With this background, it should be highlighted that Indian maritime sector is looking for financing from potential partners through means such as FDIs, pension funds, so on and so forth, with a workable interest rates, which is also economical through different models, including PPP or other innovative model. We wish to invite global as well as Indian investors to be a part of this success story. Jai Hind, Jai Bharat.
Thank you, Dr. Ramana, once again. I think Providence sometimes plays a role, and probably considering the importance of the investment in the Indian subcontinent, maybe it was worthwhile to play this all over again. Nevertheless, I do apologize to all our viewers, both domestic and international, for the technical glitch wherein you could not listen to the audio earlier. I hope it was worthwhile. Well, Dr. Ramana has brought out, and we can see that ports are important for the support of economic activities. In fact, they are the gateway for nations, trade and commerce. Now let us hear from Mr. Vinod Giri, the managing partner of National Investment and Infrastructure Fund, on funding these vital components of the Indian maritime sector. Over to you, Mr. Giri.
Thanks, madam. Good morning, everyone. It's a pleasure to be part of this esteemed summit. And as Madam Joshi pointed out, my focus will be more in terms of financing on the ports and the related infrastructure sector. So if I sort of take a look back where we are, I think we've made significant progress on the financing side, be it domestic financing or foreign bonds. Of course, there's still some way to go. So on the domestic financing side, I think Indian banks have been quite an active participant on financing port terminals as well as related infrastructure projects. We have moved from a construct wherein, a decade back, the financing was more asset-based to a construct where it is more cash flow based, right? So that has been a positive development. On the global financing side, in terms of our capability to tap the foreign bond market, we have seen success. And, recently we've also seen success where, some of the leading participants have been able to do a 10-year bond, right? So that, again, is quite commendable because historically we have been constrained in the tenure, limiting it to 5 to 7 years. So I think there has been a gradual and positive progress in the financing side. Where we stand today from an industry participant perspective, I think what we are hoping for is, and more so for institutional equity investors like NIF, is when we look at project financing, two specific sort of considerations for the financing participant as such, more on the lending side. One is in terms of tenure of the loan to be slightly more aligned to the concession terms. I think we have moved to an 18 to 20 year kind of tenure, but there is still some scope to see if we could potentially push that envelope further. Second is from I think most of the financing till date are also happening from a recourse perspective, either to the corporate or to a holding company. And again, that becomes a bit of a constraint for institutional investors like us, if that could potentially move to a non-recourse kind of a financing construct. Third, and more specifically, if I look at, on some of the port-related businesses, like free trade warehousing zone, and it's a specific observation, specific request, it still gets treated as commercial real estate. And, that on account of that treatment, the tenure of the loan that is provided by banks is constrained to some extent. So that's really specifically in terms of financing where we stand. What else we could do as an industry from an innovation perspective? I think there's still a lot of scope on global financing. I think as we scale up, there is still a lot of potential in terms of tapping the foreign markets. And given that from a terminal and a port business, there's a natural hedge, I think there is an envelope that can be pushed further on that front. Plus, as the earlier speaker also mentioned, I think there are some multilateral institutions who are looking at the port sector in a very interesting way, and more so from a sustainable financing perspective. So I'm sure some of all of you may be aware. ADB has come up with a financing instrument for a smart ports kind of infrastructure, which basically ensures that if you are taking projects to making the port more efficient and making use of more natural resources, including renewables, there will be competitive financing that will be available for that kind of projects. So again, in the broader theme of ESG and sustainability, this is another avenue that I'm sure ports and terminals would tap as we go forward. Now, changing track, looking at from investor perspective, I think the sector continues to be of immense interest from both domestic investors as well as foreign institutional investors. We have seen large transactions happening in the sector. Of course, from a capacity addition perspective, given that we went through a very aggressive privatization in the early part of 2000 in that decade, I think capacities are there today, and I think we are on the cusp of the next round of capacity enhancement, both in terms of incremental project as well as some of the old concessions coming to a tenure end. So there will be sort of new bids that will be coming in. So I think from an investor perspective, it continues to be a sector that is of high interest. I think, again, from an expectation in terms of what could be done going forward, is there are 2-3 aspects that I think the sector is working on. There is a significant push from government. There's a significant push from various entities that have come into play to accelerate the investment in the sector. I think one is, of course, as the earlier speaker mentioned, the whole movement towards more of a landlord port kind of a model, right? That is a great model that ensures the common infrastructure is taken care by the port trust, which I'm well placed to do that. Whereas on the terminal side, the efficiency will be brought in by the private sector. So that's the right model to follow, and we expect a lot of positive movement on that front. Second, in terms of I think on the port connectivity projects, right, there is a lot of scope for higher integration and a higher coordination amongst various stakeholders, because it's a port is really successful if the connectivity issues are really sorted out. So I think there is some element of catch up that needs to happen on that front, and I'm sure there are authorities working on that front, but that again is a specific requirement. From more in terms of a construct perspective, I think, if you look at the model concession agreement, it still has certain sort of shareholding restriction, right? If you look at other infrastructure sector, there is flexibility for developers to really monetize within a limited time period once the asset gets operational. So I think there is some revisit that can potentially happen on that front. For example, in the road sector, that period is limited to 6 months, whereas in the model concession agreement, it is, the 51% still needs to be sort of maintained at least 2 years till COD. I think, yeah, that's a quick summary in terms of where we stand and what would be the expectation from a investor community perspective. So I would be very happy to take question and answers at the end of the
Thank you, Mr. Giri, for giving us a perspective both from the side of the maritime industry as well as from the investor perspective. That was very well put out in a very practical manner. If ports are vital organs of maritime landscape, then coastal and inland waterways may be described as arteries connecting these vital components. For achieving global level cost competitiveness in logistics and for enhancing capacity and connectivity, as well as for a greener and sustainable shipping, coastal shipping and inland waterways are a must. I now request Mr. Ashwani Bhatia, the Managing Director of State Bank of India, to share his perspective on financing of coastal, inland waterways and allied infrastructure. Dear speakers, we are running a bit behind schedule because of the technical glitch. I request your cooperation. Thank you so much. Over to Mr. Bhatia.
Thank you, Madam Joshi, for this opportunity. I'll try to keep this as short as possible. As the largest bank of the country, our bank has been supporting the port infrastructure in a significant way. So most of the large ports have been supported by bank in terms of funding and international funding also in some form or the other. So if you talk about the Sagarmala initiative, if you look at the ports, yes, we have been all over the place. As one of your speakers said, we do have a 7,500 kilometer long coastline, 14,500 kilometer potential navigable waterways. That is what I'm supposed to address. But suffice to say that part in our funding is still very, very small. So how do I look at it and what does the bank expect from projects? It's very simple. Today we have a very sustainable model for roads. We have a TOT model, we have a BOT model. All those models are very, very clearly defined. So from asset-based, we have actually moved to cash flows. And in the last couple of years, and more so in the coming financial year, we will see a lot of interest on the InvIT side also. So what needs to be done on the waterways? A certain amount of certainty will help. PPP models will help. And the fact that, right now, the waterways are underutilized, and the fact that the National Waterways Act and the implementation of the Jalmarg Vikas projects are the key steps. A certain amount of certainty will be good. So how do the users pay? How do the barges get their traffic? What is the certainty of cash flows? What kind of funding will the government provide? What kind of grants will there be? All that would be very important. So point number one, to assess the project-specific user fee that generate commercial revenues from projects and to commit revenues for project-specific payments, allowing long-term concessions, performance for O&M concessions for the existing infrastructure, and the savings that may come from energy savings, performance, etc. Funding right now if you ask me, is no issue at all. Banks are sitting on significant liquidity of over 8 lakh crores, as you may know. But one opening that we saw in the recent budget, where the government permitted the funding of aircraft and its leasing from the gift city, if something similar could be worked out for the Indian port sector, would actually help. The very fact that very few ships have Indian flags also should be a matter of concern as our economy grows and our trade increases globally. So some more enabling factors from the government side would help. So obviously you'll have to work on the taxation part, because most of these ships today are flagged from Liberia or Singapore and all these places. Most of the finance is done from Chinese or Japanese banks. So we do need and learn and understand that ecosystem more properly. Our experience of financing ports has been satisfactory. And as India's footprint in global trade grows, I think the waterways will play an increasingly bigger role. But there, even on the waterways, currently the navigation data is not available in many of the locations where we have funded internal waterways through barges and so on and so forth, have not been satisfactorily. Some issues on legal and environment did crop in. So if those rules are laid out very, very clearly, it will help the banks. So we think that the potential here is huge. Just like great cities all over the world have been built around ports. So Bombay, Madras, and Calcutta, or Mumbai, Chennai, and Kolkata have been built around ports. Smaller towns can also come up there. One of your speakers had talked about storage facilities, building of silos, cement, all the bulk transportation that can happen from the ports. We'll be very happy to look into such proposals. They do offer economies of scale. If there's a proper model, if there are cash flows, we'll be very happy to look at the opportunity. So all the very best, and thank you for the opportunity that has been given to us to be part of this summit. Thank you very much.
Thank you, Mr. Bhatia. Speaking on behalf of the largest bank in India, I thank you for giving us that optimistic note, both with respect to the potential as well as with respect to the availability of the liquidity. I must say the bank has truly been supporting the maritime industry in all its different branches. And with that, we would now move on to our next speaker, a foreign speaker from KFW IPEX Bank, who's going to talk to us on innovative solutions for funding and developing vessel financing mechanisms. Over to you, Mr. Sebastian Blum. Welcome to this Indian Maritime Summit.
Thank you very much, and it's a pleasure, and I'm honored to speak at your conference. I'm joining you from Frankfurt, where it's early morning, and I just can confirm what Mr. Bhatia said. So there is liquidity in the market, and I'm happy that I can do a shorter presentation, because all my speakers before already mentioned and gave a very good resume of what's the state of the current ship finance industry worldwide. I think Sue from Northern Rose did a very good resume of what happened last year. And she said the focus already on ESG. So we have a short presentation. I will go through the first two slides very quickly. If you can put them on the screen, otherwise I do it without. Okay, so maybe we can directly go to page 2. So that's just to give you a short overview of KfW IPEX Bank, who we are. We're a subsidiary of KfW, which is the state-owned Bank of Germany, the Development Bank of Germany, 80% owned by the federal state, and then by the federal states 20%. We have a AA+ rating. And we are 60 years active in export and project finance, and India is a very important country for us. We're focusing on infrastructure financing, energy as well, and then also the protection of environment. And that gives us a very good footprint all over the globe. And what we always need is a European link for our financing. So maybe we can switch to slide 3, where you can see in what cases we can act. So we need the German link or the European link can be for sure an investor from Germany or from Europe. It can also be European equipment. At the end, we are a very active member of the maritime industry in Germany and around the globe. Maybe to slide 3, there we can see some numbers on our portfolio. So we have a strong focus on cruise financing because of the German and the European shipyards. And then we also have a good spread between different kind of asset classes, so containers, bulkers, and tankers, and so on. And then maybe directly to slide 4, because that's the part where I really want to talk about ESG and exactly what's in it for you as a borrower as well, and what's important for us as a bank. So I think that's what you mentioned before. So there's 2 different ways of this kind of labeling of loans. One is the green loan, and the other is the sustainability linked loan. The green loan is focusing on what is financed, so really the ship in this case. And what is to be done is that you prove that you use these proceeds for a specific ship, which is very energy efficient. There is a project evaluation. You have to do a framework around your sustainability management, and then you have to report on this, and then you can get the green label of LMA and the other standard setters. You need a second party opinion by a consultant, which can be DNV GL, Sustainalytics, or someone like this. And on the other hand, you have the sustainability linked loan that can not only be environmental part, that can also be on the social and the governmental part. There you have to show the whole, let's say, management you're doing on ESG. And as you mentioned as well, you can have a margin grid based on certain objectives you're setting yourselves. That can be, for example, CO2 emissions, and then you can reduce the margin for your financing. What is this all for? So you send a message to the market of what you're committing to, and at the end you can maybe go to a broader audience. So a lot of international banks are very hungry for this kind of loans, and that's why they're willing to maybe reduce the margin a bit as well. It costs some time, and there is the necessity to go for a second party opinion, but that can be done in a quite efficient way. We think it's something very good if you have a project which matches the criteria to use this. And then in the loan agreement, it's just a reference to the principles, and it's not that much different from a normal loan. Maybe then to slide 4, to slide 5, where we can see some of the examples of the last, let's say, months and years. So we have different loans for different kind of asset classes, for LNG fueled vessels, but also for hybrid vessels. We have been part of a financing for Hapag-Lloyd some weeks ago for LNG container vessels. And you see the market is growing. It's of big interest for a lot of the banks to have this kind of label on the loans. And we think also for the new investments you will be doing in ports or also in vessels, that's something which is worth considering. And for sure, we are there to help you and support you to do this in an efficient way. We have an office in Mumbai with the esteemed colleagues there who can guide you through these processes. And then another scheme I wanted to mention, because I know there's a lot of second-hand tonnage as well, which might be refurbished or which needs some improvement on the energy efficiency part. So I think we can switch to slide 6. And there you can see that's the structure we have been doing for retrofit financings. So if, for example, you want to invest into scrubbers, which has been done during the last years because of IMO 2020, if you want to do investments in new propellers or LNG retrofits, and then everything you can imagine, you can maybe then use the ECA of the country where the equipment is coming from to give a guarantee for the value of the equipment and also for the installation. And that's then something which can be structured in a way that you don't need the vessel as a security, because normally that's already with the other borrowers. So that's something which has been proven very efficient and very good, especially for refurbishments, and that's something we also see in the European market, but now also in different markets. And I think that might be helpful for India and our shipping clients there as well. And for sure, we also finance ports. So we have a port financing department just close to financing for DP World some weeks ago. So that's also something we're interested in and happy to support. And yeah, then I'm happy to take your questions. And thank you very much.
Thank you, Mr. Blum. On a very, very sensitive subject, I think the pandemic has taught us the importance of looking after the environment and talking about green loans and sustainable loans. From there, we'll move on to last but not the least, our speaker for the day from Exim Bank. We've heard domestic speakers and we've heard foreign speakers, so I think it's appropriate we end up with Dr. David Rasquina talking to us from Exim Bank on the opportunities and the challenges for domestic and international financing. Over to you, Mr. David.
Thank you very much, Madam Joshi, and thank you for giving Exim Bank this opportunity to address this august audience and to listen to so many extremely knowledgeable speakers. Given the paucity of time, I'll focus on 2 or 3 broad issues, which are both a challenge and an opportunity for the maritime sector in India. When we talk of maritime, whether we are talking of ships or infrastructure, we necessarily are talking about long tenor financing. Mr. Vinod Giri pointed out that we are looking at 15 to 20-year term financing, not the short terms which are normally available. We also have a situation where a near perfect hedge is available to shipbuilders, to ship owners, to ship charterers, and of course to the maritime infrastructure, since they have an opportunity of generating revenue in foreign currency and can therefore borrow also in foreign currency. You therefore have a marriage made in heaven. The deepest and widest capital markets in the world are internationally, and they are definitely partial to financing this kind of infrastructure. Ship financing is a specialized area in itself and operates very, very successfully around the world, maritime infrastructure as well. How is it then, however, that if you look at the current year 2021, we're already 2 months into the year, over $3 billion have been raised by Indian companies and Indian entities in the international market, including the State Bank of India, where Mr. Ashwani Bhatia just spoke, and Exim Bank. But we do not have any shipping firms, we do not have any shipyards, we do not have any maritime infrastructure. Somewhere there is a gap, and the gap needs to be filled. The supply of funds is available. We have insurance companies, pension funds who are looking for long-dated assets. We have people looking for long-dated liabilities. What is holding it up? Essentially, the transition from a BBB- rating which is the ceiling for our sovereign rating here in India, makes this kind of financing slightly less attractive for very, very long periods of time. Therefore, there is the need for a bridge by way of a credit enhancement. If the State Bank of India or the Exim Bank were permitted to add our credit enhancement and boost the rating applicable to the bonds that might be floated by shipping companies, by shipyards, or by maritime infrastructure, this would attract a much wider array of fund suppliers who would be willing to look at providing longer dated financing at more attractive terms as compared to a standalone. Unfortunately, perhaps the regulatory infrastructure in India today, in terms of the norms of the Reserve Bank of India, do not exactly permit this kind of credit enhancement. Perhaps it is time we need to relook at this significant issue and enable, and there can be hedging conditions laid down by the Reserve Bank of India, that it is specific to the sector, that it is specific to cases where maturity transition to a much longer maturity is applicable. But this kind of credit enhancement is a win-win situation for everybody. It offers the maritime infrastructure and ships a much longer credit period and at a lower interest rate. It offers banks like the State Bank of India and Exim Bank an opportunity for doing further business in the sector. It offers overseas investors the opportunity to participate in this regard. So we would strongly recommend that this kind of structure be thought about, and perhaps the Reserve Bank of India be asked to reconsider this particular aspect. Presented the budget on 1st of February, and we might have all heard the plans for a new development financial institution. Highly needed. We made a significant mistake in closing down the Indian DFIs in the late 90s and early 2000s, and I'm afraid we've paid a very severe price for that. Of course, banks as large as the State Bank of India are in any way as good as a DFI and can meet the needs of the sector. But not every bank is a State Bank of India, and we need to broaden the sector to allow other banks who have an asset liability mismatch to look at the sector. The answer lies in the DFI, and we look forward to the terms of the DFI when announced by the government. Perhaps given the earlier discussions that we've had, and Shipping Corporation, of course, is aware of this, we talked about a maritime development fund for the sector. For a variety of reasons, it did not progress. I'm not gainsaying that point, but perhaps in the new development financial institution, we need to look at a maritime wing, which would focus specifically on this sector. It has linkages both internationally as well as nationally. It can boost India's exports, and it enables us to make that valuable step towards the 5 trillion economy that all of us are looking for. On the export side, Exim Bank is more than happy to support these. We have the Government of India lines of credit and buyer credits, which have supported exports of patrol vessels and other such shipping vessels from India to countries like Sri Lanka, Bangladesh, Mauritius, and so on. And we stand ready to do more such. We would be greatly engaged, however, in the two areas of the development financial institution and the access to the international capital markets, which would bring both of these together. I'm happy to answer more questions on this, but I'm conscious that we are reaching 12 o'clock, and in accordance with the promise I made to you, Madam, at the beginning, let me take a stop at this point of time and be ready to answer any questions. Thank you once again for this opportunity.
Thank you, Mr. Rasquina. You were very brief, but I must say you got everything encapsulated very well. And I think we are all very conscious of the need of a DFI, as well as thank you very much for those suggestions on the long-dated assets and the liabilities and the requirement for credit enhancement. And I also thank Mr. Bhatia for giving us a lot of enabling factors. I feel satisfied on the deliberations of today's session, where we've got very vital practical recommendations and suggestions, which we shall be able to put up to the regulators and to the government, considering the deliberations we've had today. Since the audio on the YouTube was initially not there, and we started with the address of two CEOs from Standard Chartered Bank as well as from CRISIL, it will be most appropriate for us to hear after we've concluded our deliberations on what these two CEOs have to say with respect to sustainable financing and ESG, which is going to be the responsible way of financing going forward?
As food for thought for the esteemed participants of this summit, sustainability-linked financing is an emerging trend in this sector, which should be carefully considered. It is imperative to work towards reducing the carbon footprint of our businesses and advancing the environment, social, and governance agenda.
We now move to listening to Ashwani, the CEO of CRISIL, Managing Director and CEO of CRISIL in India, what she has to say on ESG, taking up from where Zareen left us.
On another note, ESG financing worldwide is gathering momentum, and also in the shipping world. After all, it is the responsibility of those who use the oceans for commercial benefit should do so responsibly. ESG factors are beginning to get embedded in all business and investing decisions. It won't be too long before even the lending and investing institutions in India adopt ESG as a hygiene factor when lending to this industry.
Having concluded on our first part of the session on maritime financing, it is definitely imperative for the growth of the maritime sector that the insurance and reinsurance, which are very vital, get integrated for risk management along with the maritime financing. Before we move to our speakers, let us hear from Captain Savraj Mehta, the Chief Commercial Officer of North of England P&I Club, on his views on India as a destination.
Insurance hubs have traditionally been located in Western European markets such as London, Bermuda, Zurich, but also Singapore and of recently in Dubai. So why not India? International Financial Services Center Gujarat, Gift City, is enabling to transact reinsurance business in India. So whilst there is considerable distance still to be covered in achieving these goals, a very positive start nevertheless has been made, and we will achieve our goals in not too distant future.
Thank you, Mr. Mehta. It was pretty early in London. So moving back to India, let's listen to Mr. Sahai, the Chairman cum Managing Director of New India Assurance, with what he has to say on the Indian marine insurance landscape.
I was to participate in Reform Session 3 on maritime financing and insurance, and therefore here I am. We are clearly the first choice as far as ship owners are concerned. Our products include hull and marine insurance for vessels, port package policy, construction and risk, and of course, we are the only company to offer P&I cover for Indian flag vessels.
Thank you, Mr. Sahai. Moving from one CMD of a large insurance company over to another, I now invite Mr. Divesh Srivastava, the CMD of General Insurance Corporation of India, to lead us through a panel discussion on molding India as a maritime reinsurance hub. Over to you, Mr. Srivastava. You can introduce your panelists and start with your panel discussion.
Thanks very much, ma'am Joshi, for giving us this opportunity, and also to the Shipping Corporation of India for having put together such a distinguished panel. I will briefly introduce our August panel to the gathering here. We have with the ladies, Mrs. Aarti Mathur. She is the general manager at Oriental Insurance Company, head office in Delhi. She has under her belt an MBA from the Faculty of Management Studies of the Delhi University. And after her initial posting at head office, she has moved around the country considerably and has absorbed a lot of happenings around the country with postings in Siliguri, Ahmedabad, Pune, Guwahati. She has pretty much been pan-India and brings that experience to the table today when she has as a panelist here. Interestingly, while working at regional office at Ahmedabad, she had worked out the first industrial all risk policy of the company and issued it to Messrs. Gujarat Torrent Energy Limited, and also worked to issue the first clinical trial policy to Torrent Pharmaceuticals at Ahmedabad. So these are considerable achievements that she has under her belt. On a more personal side, she is an intense cricket follower and also plays cricket herself, having represented the state of Andhra Pradesh and her university, and has also done interstate university championships. Presently, her portfolios are that as a general manager include reinsurance, miscellaneous, marine cargo, marine hull, aviation, crop cell, RID, estate establishment, publicity and communication. So a very wide experience that she has, and we are thankful for you to have been on this panel, ma'am. Thank you. We also have with us Madam Kuhu Mohapatra. She joined the industry as a direct recruit officer in 1987. And this is after finishing her postgraduate and her MPhil from the School of International Studies at Jawaharlal Nehru University. She is also an associate in marine insurance, which shows clearly her proclivity to marine as an insurance. She joined New India, as I said, as in 1987 and has worked in all lines of business. But of course, her particular focus has been on property insurance and marine insurance. Currently, she's looking and is in charge for marine reinsurance of New India Assurance. We also have, though it would be very early in London right now, I guess, Captain, and not even 7 o'clock, we also have with us Captain Rahul Khanna, who is the global head of marine risk and consulting at the Allianz Global Corporate Specialty, AGCS. Captain Khanna is a qualified master mariner who has spent over 14 years at sea, sailing on oil tankers and bulk carriers, and moved ashore after sailing as a captain for 2 years. In his current role, he focuses on risk consulting strategy for global marine business of AGCS. As I said, he's based out of London with his office right at the EC3 area, the hub of insurance, the Mecca of insurance, as we call it, and brings to the table all the experience of the London market. On a more personal level, Mr. Captain Khanna was recently adjudged at one of the top 10 marine insurance personnel in 2020 in the UK by the Lloyd's list. Recently, Captain Khanna was included as a multicultural and international role model in a publication released by the Insurance Cultural Awareness Network, ICANN, and Chartered Insurance Institute. He also serves as the Vice Chair of the Indian Maritime Association of UK. So thank you, Captain Khanna, for agreeing to be with us today on this panel. If I may start with Madam Kuhu Mohapatra. Ma'am, when we look at the seminar that we are having right now, and with a special emphasis on India as a maritime reinsurance hub, what do you think India has to offer that would make it an attractive maritime reinsurance hub?
Good afternoon to all the ladies and gentlemen, and thank you, sir, for this question. I would now highlight to you what India has to offer to make it a maritime reinsurance hub. As has already been highlighted earlier, India has got a coastline of almost 7,500 kilometers, out of which the total navigable length is 14,500. The number of coastal and inland vessels is around 12,000, while that of ocean going is around 300. But though the numbers are extensive, the marine premium in 1920 was only around 2% of the total gross domestic premium, which is 3,518 crores. Almost 60% of this premium goes out of the country by way of reinsurance. Whilst on this, it would be pertinent to mention that in 1920, around INR 23,416 crores of RI business was placed out of India. To retain this in India, the focus should be on capacity building. The government has now made an effort with IRDAI as the catalyst and emphasized on RI growth by opening up the market increasingly to foreign reinsurers. In the budget, FDI limit in insurance sector has been increased to 74% from 49%, a move which was aimed at attracting greater overseas capital inflow to help the sector. In 2015, the International Financial Service Center has been set up at the GIFT City in Gujarat, which aims to create an appropriate regulatory framework and an underlying ecosystem for making India a preferred destination. There is a very competitive tax regime which offers almost total 100% tax exemption for 10 out of 15 years. It has a minimum alternative tax of 9%. There is no CTT, STT, GST or stamp duty, no capital gains tax, and several such incentives. Attractive guidelines have been issued by the IRDA on repatriation of surplus generated on excess assigned capital maintained by the insurance units in the IFSC. The efforts have been on to develop necessary expertise among professional and students alike, because to attract foreign capital and the foreign reinsurance company to set up their hub here, their offices here, we need to have an expertise with domain knowledge here. So NIA has signed an MOU with the Swiss Re Global Business Solution in India to enable collaboration in this. India would soon have a repository of expertise in this domain. Now, another important headway which India has made is in taking advantage of the technology. We have made an effort to standardize data, the key objective of which would be to digitalize and automate the end-to-end process, replace the paper-based process, and integrate the placing and back office data. I would like to bring it to the notice of the August House that all over the world, everything is manually done. There has been no digitalization of the displacing and paper-based process. Singapore is making an effort in this direction called the Rushilicon structure, but they have still not come out with this. India, of course, our GI Council in an ITAS-based structure has made an effort in this direction, and soon we would be the first country to automate the RI payment system on a single platform, which hitherto is being done manually across the globe. This, I think, is something which is a feather on our cap and the first time India would be doing in the globe. Regarding dispute, we have in India a corporate governance structure where dispute resolution is taken up in the GIFT City, and Singapore Dispute Resolution International Arbitration Center is already operational there. The appeal from there is as per the contract. But in marine, we have certain gray areas. First and foremost is the development of a protection and indemnity club insurance business in IFFC has already been pointed out. Protection and indemnity clubs cover a wide range of liabilities, including loss of life and personal injury to crew, passengers, and others. But at present, under provision of Section 2CB of the Insurance Act 1938, majority of insurance business of P&I club has been placed with foreign insurers. The IRDA has requested Indian National Shipowners Association to explore possibility of having P&I club branches in GIFT City. It is suggested that IFCI Development Wing may pursue the matter with INSA and P&I Club to explain the advantages of setting up operations in IFFC once we have this corporate governance in place. Insurance and reinsurance brokers who are well versed in the subject would establish contact with the P&I clubs and the Directorate General of Shipping, Nautical Wings, Insurance Branch, Ministry of Ports, Shipping and Waterways along with the Government of India. This would attract all the PMI premium and would retain it in the country. A second area which needs attention is claims assessment in marine. We still do not have general average adjusters in India. We are dependent on the London general average adjusters. We have a National Insurance Academy. We have insurance institutes in India. I think we should advise them to devise a course which would train all these them in line with the London codes, which would be internationally acceptable, and we would have that in-house facility in India, which would help us in assessing claims, the general average claims in India, where there are none. Another area which needs a little bit of attention is the salvers. We still do not have in Indian salvers, and international salvers which we use here take a lot of are very expensive. So I will conclude it here. We have now entered a renaissance in reinsurance. Entry of foreign entity has introduced healthy competition, regulatory easing and corporate governance mechanism in its place. Automated account settlement on a single platform would soon see the light of the day. So if the little bit of this marine is taken care of, India is poised to be a global reinsurance marine hub. Thank you so much, sir.
Thanks very much. Thanks very much, ma'am. In fact, you have taken care of both the pros and the cons. So what we lack is also been brought to the fore by you. Thanks very much for that. But yes, that is something that we can offer. Let's have the views of Captain Khanna, because now he can give us a view from the London market, which is already an established, as I said, the mecca of insurance. And Captain Khanna himself works at Gracechurch Street, which is just a stone's throw away from Lloyd's, which owes its very existence to marine insurance from the coffee house, from where it has progressed in 300 years. Captain Khanna, if I may ask you, that what Madam Kuhu Mohapatra has told us is what we have to offer. But sitting in London, and with the experience that you have there and the market as the biggest and the best hub that we have in the world, what do you think should India have to offer? I mean, Madam spoke about Gift City also, but what do you think should India offer to make it an attractive destination?
Well, thank you, Deveshi, and thank you for the opportunity to be here, Joshi ma'am. I think for me, I'll start by echoing what you just said. My daily commute to work is going in front of the site where Edward Lloyd's actually ran the coffee shop in Lombard Street. So a city which is based in so much, steeped in so much history and heritage. No wonder it is a modern insurance hub. But I think it's not the history or heritage which keeps London as the insurance hub in the world, as the top insurance hub in the world. I think there's a lot more which goes into it. 350 years ago, insurance started in marine in London, but keeping that takes a lot of effort. And I think we can just trying to pick up some broad points on why that is so and what is keeping London as the top insurance and reinsurance hub in the world. I think one of the first key aspects I feel is the ecosystem which a very agile regulatory environment and government and industry as such provide to the insurance hub. I think if you look at the regulatory environment in London, the overall structure, they work very well with the industry, not as an opposite party, but as a partner in understanding the issues of the industry and coming up with solutions and being very agile with changes to the industry. I mean, insurance industry has seen so many ups and downs over the years, and London itself has seen. And one of the examples that I would quote is, for example, the pool restructure, which was set up in early 1990s to provide tourism insurance and reinsurance structure. I mean, that was an example where the government, the regulatory environment, and the insurance industry came together to provide insurance against such a difficult risk, that is terrorism. Another example for the industry and the regulator coming together and providing a framework was the flood re, which was set up in 2000s. Again, it was such a resilient way of working that the insurance industry worked with the regulator to provide insurances for all the high flood risk area, which would otherwise almost be uninsurable for the insurance on its own. But at the end, to keep the premiums and the policyholders' cost affordable, the industry worked out a solution. Now, this is the resilience and the environment in which an insurance hub should be working upon. I think it's heartening to see that Mr. Kuntia is here with us in this panel discussion. So their support is already there, I can see, and a lot of changes that has happened in India. And as Kuhu ma'am just said, there's so much progress happening in India. I think there's no reason for it to be looked upon as a future reinsurance hub. I mean, looking at some other numbers as well, last year, the total written premiums in London insurance market was about 110 billion. And if you compare that to Singapore and Switzerland, which is 25 billion and 11 billion respectively, this gap between London and the other newer insurance hub of, for example, Singapore, have actually been increasing. Now, this was not thought. In 10 years ago, it was thought that London would lose its charm, but that hasn't been the case. Now, this is because obviously it has kept its status because there is a lot of churning of top quality expertise within London. The underwriting expertise that we have, the ability to write complex and big risks where capacity is not an issue. Obviously, it is also supported by the financial institution, and it's no chance that London is also a financial hub for the international community, and the capital flows in very quickly. As an example, if you probably would heard, the Convex Insurance, which is a new insurance startup, managed to raise close to $3 billion in a short span of a year. For a startup to do something like this, you would need a very robust, very resilient hub for financial institutions as well as insurance institutions. I think a couple of other points before I finish this is just echoing on what Kuhu ma'am said, is the supporting infrastructure that needed. The salvos associations, the surveying community, the educational institutions, which are providing and churning out talent after talent every year. And this is key to an insurance hub. I think the decision by the Indian government announced in the recent budget to increase the participation to 74% is going to ensure that reinsurers can open up full-fledged branches in India with complete infrastructure in here, which will effectively, pass on the talent and knowledge which has till now traditionally been in centers like London, Singapore, and New York to India and in the cities like Mumbai and probably in Delhi as well. Now, these sort of centers, these sort of opening up reinsurance companies here will actually invigorate the vibrant community that is actually needed for an insurance hub to survive. There are plenty of other things which I could go on, the green principles, but I think in interest of time, I think I should stop here and we'll take on any questions. But thank you again for the opportunity to speak.
Thanks very much, Captain Khanna. That was very well put, because yes, nimbleness at its feet is what is the USP of London, possibly coupled with the immense amount of intellectual capital that they have in the EC3 area. That's really unimaginable to be replicated, but I mean, not impossible to say, and that's what we are aiming for. So thanks very much, Captain. I will ask now Aarti ma'am, who's a panelist from Oriental Delhi. Ma'am, while a lot of has been said, one area that has also been, actively raised by a lot of speakers is the P&I club, or the lack of it here in India, and how it has not caught on really. So, I mean, if I may ask you, how attractive do you feel the P&I market is there in India, and what future would a hub hold for these clubs? You are on mute, ma'am.
First of all, I'd like to thank Mrs. Joshi for the diligent follow-up that's been happening from her organization as far as this panel discussion is concerned, and I'd like to thank Devesh for the very kind introduction that he's given. I have had a lot of experience across the industry, and the question that's being raised has, in part, has already been, taken care of by Kuhu, and I believe that we are probably on the cusp of the time ceiling which the organization has set up for us. So, just for a quick thinking, the PNI Club has been typically been for centuries, probably since the time that marine insurance itself and commerce itself has started. And this has typically been something that the ship owners have used as a kind of pooling of capacity where, insurance, would not look at covering, particularly in risks like liability and towards the cargo owners and pollution liabilities, which in the international context constitutes a very large chunk of the kind of risks that an insurer would face. The P&I clubs have traditionally been operating out of the larger shipping hubs, which remains the London market or remains the American market or the Nordic market or Japan. In India, as Kuhu was saying earlier also, that the marine business itself is one of the smallest lines of business that is there as far as the insurance industry is concerned. And therefore, it constitutes barely about 1.5% to 2% in the previous year. And in this year, with the pandemics, it's probably only shrunk. The idea of expanding it also requires that there needs to be adequate amount of business in the market. And to that extent, I would say that the PNI clubs in India have always been thought of as concept. Maybe in a limited way they have been in existence, but that's a concept which is not really taken off. And it is largely due to the fact, which one of the speakers earlier was also mentioning, is that we do not have too many large shipping organizations under the Indian flag. And therefore, you do not find a large number of ship owners coming together to, build this kind of capacity, which is what a PNI club is all about. Secondly, if you look at in the context of the charterers is another, section which could be looking at, support from the PNI club, but typically there is always a balance in favor of the ship owners versus the charterers. So therefore, what is that this concept has not really taken off. There is, as eloquently pointed out earlier by the earlier speakers, we do not have a proper ecosystem for it. And the fact remains that when we talk of liability, there has to be an adequate ecosystem. There have to be people, adjusters who are able to, come down to it and, work out what would be the levels to which a claim may become payable. Now, if that basic structure is not there in India, and you keep needing to go back to maybe the London market or the American market or Singapore, then that creates a cost which at the moment probably the ship owners are not really in a position to bear, and therefore the PNI club has not really taken off in India. The Indian insurers have had these PNI policies from time to time. I think New India have the policy, and at Oriental Insurance also. I remember more than probably 10 years back, the Goa Barge Owners Associations were protected by the PNI, of course, with support from the reinsurers. Now, there again, I believe that GIC also can look at its role and to see how they can support capacity with the domestic market as the prime reinsurers. And even though you will be having more FRBs coming in with opening of the of the market with the regulatory changes which has happened, I believe GIC's presence and GIC needs to play probably a bigger role in this and support the domestic insurance market. And all of this ecosystem was the only thing which would probably help in ensuring that the PNI clubs actually start functioning and become matured. And of course, the Gift City is a concept. It needs to take off. It needs to be seen how the players actually move into that area. And therefore, though there is definitely a potential from the Indian context, I would still say that if we look at the realistic picture, there is still probably a very limited kind of growth that you'd expect for the PNI in the present context. till such time that we have an adequate amount of ecosystem available, and also till such time that the Indian ship owners itself, the flags, the market itself, the waterways which are there but probably are not being used as they should be, and with the government of India's policy to increasing use of the waterways, probably you'd have more Indian flag companies coming through, which would in turn result into a higher domestic premium, and therefore reinsurance and PI clubs would follow as probably a corollary. This would be my take on it. Thank you, Devesh.
Thank you so much, ma'am. I mean, clearly, yes. I mean, as far as the knowledge transfer you spoke about, ma'am, since we have a syndicate at Lloyd's, considerable knowledge transfer is taking place. But I guess in a nutshell, the panelists have clearly emerged from this discussion is that while we have all the ingredients in place, it is now up left to us largely, be it taking the help of the gift city or even otherwise, to churn out that dish. So we have a journey in front of us. Thanks so much. I'm really thankful to the panelists. And Madam Joshi, the floor is yours. Back to you, ma'am.
Thank you, Mr. Srivastav, for a very engaging and a very interesting session. I must appreciate the frankness with which the panelists expressed their view. And considering that Aarti did bring out very eloquently the fact that capacity building is the requirement, the need of the hour. And that is where, Aarti, you've done my job by bringing in the relevance of integrating maritime financing along with insurance, because until and unless the adequate maritime financing is not available for capacity building, the insurance market will not be able to take off. Like you said, an ecosystem needs to be created. So we're very privileged to have amongst us the regulator himself. So we've got Dr. Subhash Chandra Khuntia, the chairman of Insurance Regulatory and Development Authority. We are highly honored and privileged, sir, to have you here. We welcome you for your concluding remarks, having heard all that the panelists had to say on reinsurance and the insurance market in India. Over to you, Dr. Khuntia.
Thank you very much, Mrs. Joshi. And I had been listening to the views of the panelists, and I think they have all brought out many relevant points regarding the maritime insurance and its development in the country. As already pointed out, that the history of insurance is the history of marine insurance, because the maximum risk was attached to the ships in centuries back, and that's why the people had to come together and pool the risks, and sometimes share in large profits, but sometimes also they had a share in large losses when the ships suffered damages and all. So, of course, the London market, as Captain Khanna mentioned, that it has developed very well, and it also has the ecosystem for the marine insurance. But we must also remember that these emerging economies, of which India is one of the leading ones, they have the demographic advantage for the future, and also the total market size of these emerging economies would grow much more than the growth of the already established developed economies. As you would have seen, India is now number 6 in the world as far as the total GDP is concerned, and it is moving up, and the kind of benefit of the large size of the market lies in India and other populous countries. So I think we must not be discouraged, and we must develop this market. And of course, marine insurance can be developed if the maritime activities are developed overall. And that is the purpose for which the Maritime India Vision 2030 has been vision. It's a 10-year blueprint, which is very ambitious, but I am sure this would be achievable. Kind of increase in activity, large additional ports, develop kind of augmentation of the existing ports, then the shipping activities, and as it was mentioned that the kind of more than 80% of the total world merchandise trade is by volume is by sea. So, and India would be no exception. So the kind of traffic is traffic doubled in India in a decade, and this will go on. And our marine insurance in India, overall cargo and hull altogether constitutes only 1.87% of the total general insurance premium collected. So though it is still small, but it has the potential to grow. And in 2019-20, the premium that was collected by Indian reinsurer and the FRVs stationed in India in marine trade, in marine line, it's of the order of 2,245 crore, but it recorded a growth of 19.9% over the previous year. And this year also, despite COVID, it appears that this marine line is growing quite effectively. So, and we have the stakeholders for this marine insurance, the owners of ships, owners of goods getting transported, then the mortgagee of the vessels, the financial institutions. So, variety of stakeholders are there, and I think and the marine insurance and reinsurance would be needed not only for protection of assets, but also for compliance of maritime law around the world. So we also have a separate kind of insurance act called Maritime Incidence Act 1963, which is in force in the country. And whether it is hull insurance or liability insurance or protection and indemnity insurance or freight insurance, marine cargo insurance, all these types would grow, and we should remain prepared so to take advantage of this. And right now, India's share in the hull insurance is only 0.9% of the world total, and same is the similar is the case with kind of cargo, which is only 2.3%. The marine liability, it is as low as 0.4%, but there is scope to grow. And with our long coastline and the growth in the Indian economy, and Honorable Prime Minister has mentioned that we will grow to a $5 trillion economy. So the Maritime India vision of ours, which should kind of underline our future growth. The P&I insurance, now we as regulators, we regularly get requests for exemption for getting these insured in the country, and many people, many ship owners, they go abroad for this insurance because the capacity is not available. But there is some limited capacity with a few companies. But as mentioned by Ku Mahapatra and others, there is a kind of good possibility that the our Indian ship owners can come together and form this two things they can do. One is a maritime hub, which will be used for information sharing and kind of analysis of information on global shipping and Indian shipping. This should be a common platform. Another would be a P&I and Salvage Association and P&I Club, which would be like a kind of a mutual insurance for the participants, and it is like an insurance pool. And it is already kind of suggested that Gift City IFSC could be a good place to start. And fortunately, we have foreign reinsurance branches. Most of the large reinsurance companies, global reinsurance companies, have already come to India, and more would come with the opening of insurance sector. This will be further hastened. So, and there is a lot of tax incentive and advantage in this Gift City. So that could be used to start this kind of a P&I club. Maybe we may not be able to do it in large scale to start with, but we can do a beginning. And in fact, I had a discussion with the Indian National Ship Owners Association, and we have suggested to them to explore this possibility. So I think the Shipping Corporation of India, which is one of the large owners of ships in the country, could also take a lead in this. And this would also help in giving importance to risk mitigation and risk prevention and risk management. Kind of our Indian ports would bring in more safety features than the shipbuilding yards. Then there are other types of risks also in the shipping. One is now looming large is cyber risk. I think that also needs to be. Then environmental risks, which would be of very large size. Then whether it is fuel emission or kind of engine safety, all this, I think the preventive measures also would flow from the activities of the reinsurers for the marine lines. We need to develop our internal capacity and the skill. This insurance, size of the insurance will grow along with the size of the shipping finance sector. And it is not impossible, and we at one point of time in ancient India was leading in kind of marine activities. From the east coast of India, traders went to Indonesia and the eastern part of the world, and there was trade in textiles and various other commodities. Similarly, from the west coast, spices trade with the Middle East and the Western world had continued. But now that declined over a period of time. But I think now in this new, now that India is a kind of software superpower, I think we can use the technology in a big way in making a difference to the kind of marine insurance and reinsurance. And as far as the regulatory aspects are concerned, we would be providing all necessary support for these marine lines, both primary insurance as well as the reinsurance to grow. Of course, the primary insurance can grow only if there is a strong reinsurance presence in the country. So I think let us start with this kind of a P&I club, and we'll be happy to provide all regulatory facilitation that is needed. So I think it has been a good kind of discussion today, and I hope that this will be followed up with activities to set up a P&I club so that we can kickstart the process. Thank you. Thank you very much, Mrs. Joshi, for inviting me, and thank you, Deves, and thank you, Kuhu Mahapatra, Captain Khanna, and Arti Mathur for presenting your points of view and enriching this particular summit. Thank you.
Thank you, Dr. Khuntia, for all the optimism, support and encouragement, which is going to be a shot in the arm for the maritime industry. And these views, these deliberations and these discussions happening at this opportune time, I'm sure these are going to be the pillars on which we shall be able to build our 5 trillion economy as envisaged and as per the vision of our Honorable Prime Minister of India. And this is the growth trajectory which the Indian subcontinent has to work on. I think the deliberations today have very clearly brought out that India is the destination going forward. As Mr. Srivastav had pointed out, we've got the ingredients. We now need to ensure that we put them all together and dish it out in a proper manner so that we are able to ensure the Atmanirbhar Bharat and the vision of India going forward is fulfilled. The aspirations of all the Indians are also met. We've got a whole lot of questions, but we are running out of time, but we've got to do justice with the audience. So since we are on the insurance subject, we've got just one single question from Mr. Anant Sagar, which is addressed to any panel member on the insurance. Additional war risk premium is being charged these days by insurers. When can we expect this to stop?
Yes, Captain. Can I request Captain Khanna, or because London market will take the lead on this?
Well, if I had a crystal ball, I would probably answer this promptly. But I think the war risk premiums, as far as are set by the market, looking at what's happening in the industry in general. Now, as they know that the recent spike in terrorism acts towards vessels in the Middle East initially spiked the war risk premiums, and that risk at the moment, because the situation remains quite volatile. The reason why, and this is me talking personally, that I believe that the situation at the moment is still very volatile in the sense that not much is required to flash to start a flash in the pan, and again consider the vessels and the assets to be at very high risk at a very short notice. I think for that particular reason, the market in general believes that the risk is above the standard acceptable levels in the London market. The review of these is jointly done by the committees, the war committees, and then I think at the moment they probably looked at it a couple of months ago, but we had another incident and that was reverted back. The premiums reverted back to higher levels. We can only hope that the situation stables down a little bit in the next weeks and months, and hopefully, if we do not see any other flashpoints, the war risk premiums might come down.
Thank you, Captain Khanna. I'd request all the speakers and the panelists to please switch on their cameras for a slight time while I'm doing the Q&A session, so that we can at least have the memories of the second edition of the Indian Maritime Summit with us for the third session, which will come on. So we've got a question for Mr. Blum, KFW, which is from Mamuni Das. She says that what was the ship finance volume last year? How is it expected next year? Has KFW financed Indian ships projects in the maritime side? So there are three questions all roped into one for you, Mr. Blum.
Okay, thank you very much. Yes, we did financings of close to 2 billion euros last year at IPEX Bank, and our current portfolio stands at 14 billion euros in ship finance. We would have loved to do a bit more, but as you can imagine, with the current pandemic, the cruise ships especially were not ordered. Normally we do more towards 3.5 billion per year, and now it was a bit less. And we expect that this will continue throughout this year. So our estimations once again commit more or less 2 billion. And as soon as the cruise industry hopefully recovers, and there will be also some more new orders for the European shipyards, then that should increase. And we have financed Indian ship owners, not last year, but in the past. And SCI is one of our customers, and also we've worked with Great Eastern in the past. And then, as I said, on the port side, we work with DP World and some other prospects. And we have a long tradition in financing a lot of the basic industry companies, so steel and cement and so on, because there's a lot of European deliveries, a lot of European equipment involved. And some of these components also, or these companies also have ships. And that would also be something we would like to finance in the future. So more these kind of captive used ships where you have a real need to transport the goods they're producing as well. So that, and then for sure, what we also prospect for India and in the region, Bangladesh, is FSRUs. So supporting the building up of LNG infrastructure, that's something we are very interested in as well for the future. And maybe 2021 already, or in the years thereafter.
Thank you, Mr. Plum. That was well said. We've got a lot of questions for Mr. Bhatia, but he's no longer with us. So I'll have to skip all those questions, most of which are to the largest bank in India. We've got one question, Mr. David, for you, which is from Aparjita Banerjee. She's saying, thanks for enlightening us. Nicely spoken, sir. Kindly advise for the startups. Can you help us to buy vessels? If there is stringent regulation of collateral, how startup companies will operate? What are the avenues for small funding for buying small vessels without collateral? I think she's asking these questions on behalf of lamarinavigation.com.
Frankly, I have not heard of this company, and it's difficult to understand what exactly the lady has in mind. I'm not entirely clear about how a startup would be looking at owning a vessel. I'm sorry, this needs much more detailed discussion and understanding. Maybe she could contact me and I'd be happy to explain anything further in detail that she might need.
I think she has a similar question for Mr. Vinod Giri as well, where she's asked exactly the same question. What are the financial avenues for the startup shipping companies? There are collateral which are blocking from any startups. This is for Mr. Vinod Giri. Same lady asking almost the same question.
Yeah, I'm really sorry. I may not give some significant help on this matter, but I don't know.
I understand. I understand that there are several complications from an investor's perspective and for the ones who are on the lending side. And yes, there are a lot of support which is there for startups, but vessel owning is a different complicated, risky business where the gestation period is very long. And I think Mr. Bhatia did talk about cash flow funding. So on behalf of all the speakers, I'll respond to that question, Aparjita. that Mr. Bhatia did very clearly bring out that if you've got contracts of affreightment in place or any other firm contracts in place which could give security in terms of the cash flows, that is today becoming a more progressive way of financing, which is actually a little like project financing. So a ship can be looked at as a project, and your cash flows can be securitized to ensure that the lender's security is available. So that itself works as a collateral, and that can work very well for a startup as well. All you need to ensure is that you've got proper contracts in place deploying your vessel once the same is owned by you. With that, we come to the end of the Q&A session. Most of the questions are to Mr. Bhatia. I wouldn't like to answer on behalf. I wouldn't even dare to do so on behalf of the largest bank in India. So with that, I would like to profusely thank all my speakers, panelists, for a very engaging session and for the recommendations and the suggestions which we should be able to take forward to make the maritime financing and reinsurance in India a very successful story going forward. Thank you, dear audience, too, for the patience. And I once again apologize for the technical glitch in the beginning. Thank you, everybody. Jai Bharat, Jai India.
Thank you, ma'am.
Thank you. Thank you, madam.
Thank you very much.